Okay, let's talk about the U.S. cannabis industry. It is, without a doubt, one of the most exciting, fastest growing, and, let's be honest, most confusing markets on the planet. For any entrepreneur, it looks like this massive land of opportunity, but it's also a total legal maze. So in the next few minutes, we're going to give you the map.
I mean, the industry is just booming. By 2025, you've got 24 states that have legalized adult-use cannabis, and 40 with comprehensive medical programs. So this is not some niche market anymore. We're talking about a multi-billion-dollar reality, all at the state level.
So, why is it still federally illegal? That's the million-dollar question, right? This is the central conflict. On a federal level, cannabis is still classified as a Schedule I drug. That's the same category as heroin, defined as having a high potential for abuse and no accepted medical use. And that contradiction, that's the single biggest headache for anyone trying to get into this business.
You see, this clash between state and federal law creates this incredibly complex, risky, and always changing landscape. So how in the world do you navigate it? Where do you even start? Well, that's what we're here for. Let's break down the blueprint.
All right, first things first, let's get a sense of the scale we're dealing with. There are over 38,000 active cannabis business licenses across the U.S. But here's the really interesting part. After years of just explosive growth, that number has kind of leveled off. What that tells us is that the industry is maturing. It's consolidating. The easy gold rush days, they're pretty much over. Now, strategy is everything.
And this really gets to the heart of the paradox in this industry. At the state level, cannabis is a totally legitimate regulated business. But in the eyes of the federal government, it's still illegal. This creates huge problems in the real world. You can't get traditional bank loans, you're hit with punishing tax codes, and there's always this low-level threat of federal intervention. Literally every single business decision you make stems from this basic conflict.
One industry analysis just nails it. It says operators exist in a bifurcated legal landscape. That's a fancy way of saying it's split in two. It means you're simultaneously a legal state business owner, and at the same time, the federal government sees you as a trafficker of a controlled substance. It's a wild place to be.
Okay, so with that crazy landscape in mind, your first big strategic decision is a fundamental one. Are you going to buy your way into an existing market, or are you going to build from the ground up?
And there's no single right answer here. It completely depends on the state you're looking at. In those mature, really saturated markets like California or Arizona, where they put a cap on the number of licenses, your only real option is M&A. That's mergers and acquisitions. You have to buy an existing license. But on the other hand, in emerging markets like, say, New Jersey or New Mexico, you can go for a greenfield strategy. That's where you apply for a brand new license and tap into that fresh potential.
So, the big question is, how do you actually spot the difference? How do you know if you're looking at a saturated market or a genuine opportunity? Well, you need the right set of tools for your analysis.
Okay, if there's one metric you need to know, it's this: license density. It's a super simple but incredibly powerful calculation. All you do is take the state's population and divide it by the number of active licenses. If you get a high number, that's great. It means there are a lot of potential customers for each store. But a low number? That's a huge red flag for cutthroat competition.
And when you look at the data, it tells an incredible story. I mean, look at the extremes here. On one end, you've got Oklahoma, with only 405 people per license. That is an absolutely, completely oversaturated market. But then you look at the other side of the spectrum. New York has nearly 40,000 people for every single license. That just screams massive untapped potential. In New Jersey, it's sitting right there in a very promising sweet spot.
Here's another huge signal you need to look for. Does the state have residency rules? A lot of early states required you to be a resident to own a license, but they quickly figured out that just choked off all the investment. Remember, you can't get a normal bank loan, so these businesses need outside capital to survive. So when states like Oregon and Colorado got rid of those rules, they were sending a clear message: we are open for business and we want your investment.
Okay, so we've got our tools: license density and residency rules. Let's put them to work. We're going to apply this blueprint to 3 very different but all high-impact emerging markets.
All right, first up, let's talk about New Jersey. Our analysis shows that this is basically the gold standard for a predictable open access market, especially on the East Coast. So, what's their secret sauce? Well, New Jersey has an open, rolling application process. That means you don't have these super stressful, narrow windows to apply in. Plus, there's no statewide cap on licenses. And, this is a big one, no residency requirement for owners.
It all adds up to a clear, predictable path for entrepreneurs to get in.
And remember that number we talked about? Over 13,000 people per license? That high population density points to some really strong revenue potential, especially when you compare it to those more saturated markets. It's competitive, for sure, but it's a very structured and attractive environment.
Okay, now let's pivot to a completely different model, Minnesota. If New Jersey is a nice, clear path, think of Minnesota as more of a lottery ticket. We're talking high risk, high uncertainty.
So here's how it works there. The application window was incredibly narrow, just a few weeks in early 2025. And if you want one of the most desirable licenses, like for a retail store, your success comes down to the luck of the draw. It's literally a lottery. And there's a unique wild card here too. Minnesota actually allows cities to operate their own cannabis stores, which creates this whole other layer of public competition. And finally, let's look at New York. This is the market with, arguably, the biggest potential in the entire country. But it's been all tangled up in regulatory headaches. It really is a sleeping giant. The upside is just massive, right? A population of nearly 20 million people. The downside? Well, the application windows are closed right now, and getting started is incredibly expensive. But you definitely can't count it out. Get this, in 2024, New York accounted for almost 80% of all new license applications in the whole country. The demand is there, just waiting to explode.
And that license density number just proves the pent-up demand. I mean, at almost 40,000 people per license, the opportunity is absolutely immense for anyone who can figure out how to navigate the complicated rollout and grab a spot when that market finally finds its footing.
All right, so we've covered the core paradox, the tools you need, and some real-world case studies. Now, let's boil it all down into a final, actionable plan for you to move forward.
Here it is, your 3-step action plan. First, prioritize the open markets. States like New Jersey, with those rolling applications, they offer the clearest, most predictable path to entry. Second, you have to watch the DEA like a hawk. If cannabis gets rescheduled to Schedule 3, that could wipe out the punishing 280E tax code and finally unlock traditional financing. It's a game changer. And third, and honestly, this might be the most important part, you have to master local approval. A state license is useless if the town or city says no to zoning. This is the final boss battle for every single operator out there.
And this is really where we're all headed. Federal rescheduling isn't a question of if anymore. It's a question of when. And that one change is going to solve the industry's single biggest problem, access to capital. And it will completely redraw this entire map. So the real question for you is, will you be in the position to act when those floodgates of institutional capital finally swing open?